An initial estimate from the U.S. Bureau of Economic Analysis shows the economy increased at an annual rate of 4.3% in the third quarter of 2025. Bankrate senior industry expert Ted Rossman joins now to talk more about this news. Ted, is 4.3% about an average annual growth rate we see each year?
It's actually pretty impressive. Generally, the economy is growing something like 2, maybe 2.5% a year. Now, it's been a little choppy this year. The first quarter was actually slightly negative, and then the second quarter was pretty good, plus 3.8. The third quarter was really good, plus 4.3. So all things considered, we're probably a little bit ahead of expectations here in terms of what investors and the Federal Reserve and others were banking on. There are a few reasons for this. Some of it is that consumer spending remains remarkably resilient, even as sentiment is depressed because of high prices and other worries. People are still spending, and that's powering the economy. Another factor in this report was the trade deficit closed. So we're seeing more exports, fewer imports. That's something that is helping the GDP calculation.
If this number is confirmed, this will be the best quarter for growth since 2023, but economists polled by financial data firm FactSet only projected 3% growth. So what happened to cause such a boost in the economy?
A lot of it is being powered by consumer spending. And there's a couple ways to look at this, because on one hand, it's good, right? People are working, they have money, they're buying things. They're feeling bad about things, though. A lot of that has to do with higher prices, the prospect that tariffs could make prices even higher. It's really the cumulative effect of higher prices over the past few years that's straining people. We did see a bit of a pickup in inflation in this report, so that's a bit of a thorn in our side. Prices are growing in high twos, close to 3% a year, not quite down to the Fed's 2% target, although not nearly as high as the 9% or so we were seeing a few years ago. But back to that cumulative point, it's not that prices are growing tremendously this year, it's that they're building off a higher base. On average, everything costs about 25% more than it did 5 years ago. That's what's straining confidence. And, the fact that, yeah, it's great if you're working and you get a raise, but if it just goes to higher prices on things, you don't feel great about it. So that's some of what's going on here. In other words, are people spending more because they have to, just because things cost more, or because it really is showing some underlying strength? It depends who you are. Upper income households are spending more on discretionary things. Lower and middle income, they're just spending more because everything costs more.
The data published shows that inflation rose at a 2.8% annual pace in the third quarter. Is this an indicator that inflation is going to continue to rise?
It's something to keep an eye on. The Federal Reserve has cut interest rates at the past 3 meetings, basically believing that inflation's coming down, the economy no longer needs as much restriction, and the job market has shown some cracks. So they're trying to stimulate the economy, shore up any weakness in the job market. 2026 will be really interesting for the Fed because you do have these competing objectives. We also have a new Fed chair expected to be named soon. Jerome Powell's term ends in May. The president wants to appoint someone who's going to push for sharply lower rates, but there are these counterbalancing factors because a lot of what's gone on the past few years is the Fed's really been hitting the brakes to slow inflation. And then the past couple of years, they started to reverse some of that, but rates are still noticeably higher than they were, let's say, 5 years ago. So this is kind of that tug of war. Some of the answer is all news is local, not really geographically, but more your job, your income, your standing in life. If you're a homeowner, if you're a stock owner, if you have a good steady income, you're feeling a lot better about the economy than people that haven't checked those boxes. Moody's says the top 10% of earners are accounting for 50% of all spending, which is an all-time high. That's the backdrop for some of this too. The economy's doing pretty well overall, but it's not working for everybody.
All right, Ted Rossman, great insight. Thank you for joining us on Christmas Eve.